Hey, what's going on, guys? This is Terrence Ray back at you with another stock market update. So, the past week, or shall I say, maybe the past 1, 2, 3 weeks, we've been in a down move in the markets. What you're looking at on the screen right now is a chart of the SPX, S&P 500 options market. And as you can see, as I talk about a lot of times on the show, when I see gaps, I generally like to pay attention to gaps on the chart. When you see this candlestick right here, this full red candlestick, you see right here, this is a gap, and we got a gap down, and then the market, and that was back on August 1st and 6 August 1st, and today, as I'm doing this video, that's about 3 weeks of market action right here, and you can see each candlestick represents a day. The market has been going down. Now I'm going to bring up uh, some drawings right here. If you look on the right of the screen, let's close this up. And you can see this green and this red line here. Right? That is the expected move for the week. So the week upcoming, I'm going to go to the option chart, or excuse me, the option tab, where we see the option chain. So for Friday, so for the week, we have a $71 plus or minus $71 expected move. $71.41 to be exact. You look on the option chain, you see this ruler right here. This is the TastyTrade um, platform. And as far as I know, it's the only platform I know that shows this. And they have a proprietary way of figuring out their expected move. And they're showing it right here. So this is the $71.41 from the current price of 43.69.71, up and down, or down and up, vice versa. And you can see what we're expecting. Now, the previous couple weeks, that move was only, I think last week was like 50 something bucks, and the week before that was like 51 something bucks. So, so a little bit more volatility is being expected in this upcoming week. So we may see some larger rips in the market this week. So that just means that, but it doesn't, we don't know which direction, but that just means that, hey, we may get some large swings either way, up or down. And one of the things we can look at to see that, now, if you see the SPY, or excuse me, the SPX, either the SPY is the same thing. I'll pull up a chart of the SPY. You see, this is the ETF. So you can, this is the one where you can trade stock. The SPX is just strictly options. You can't own it, no stock. If we come look at the VIX, you see the VIX look like it's turning, making an upward move. And you can see that the VIX has made, so we got a high, a low, and a higher high on volatility. One thing that I will bring up on this particular show that I generally don't talk a whole lot about is the VVIX, which is the volatility of the VIX. And there's a level that I have drawn up on the chart. And you can see right here, I never take this line down. This is the 110 line. And whenever volatility gets up around 110, I know that the volatility of the VIX is rocking, right? And we can see that the VVIX on Thursday got all the way up to the line. You can see where it gets up there, that 110 kind of acts as resistance, right? You see? Right up there up against it. And even on Friday, it got all the way up to it, and then vol just died on Friday, right? So that's something also to look out for. Let's see. I have particular stocks that I wanted to take a look at on this show today. Let's go to the TLT, which is the bonds. This is the ETF for bonds. If you remember, I talked about on the one of my previous shows, I talked about um, Bill Ackman's trade. Bill Ackman basically shorting the 30-year bond, um, which consequently is getting long the yields, right? The treasury. So let's take a look at the bond. You can see the bond market, the ETF. So if you're a retail trader like myself, the easiest way for you to access the bond market is through TLT. You can trade forward slash ZB or forward slash ZN, which would be the futures market, but that is an extremely large trade. It's a very expensive, and if you're not real um, if you're not a veteran in the game, I would advise you to stay away from the futures bond market. This is a little bit more safer, simpler to trade. The TLT you can see down here, I already have it marked up. See it hit a support. Now this is from a gap way back on October 24th of, I don't even, let's see. This is a year chart, so this got to be October 2022. So this was just last year. This was October 24th, 2022. And you can see it gapped up here, actually gapped up a large gap, and then it pulled back, and then it just took off, right? And then it traded in a range from, back in December, and it just bounced on these trend lines. And then it broke down out of this trend line, came back, retested, and broke down again. Now, and for Bill Ackman to be correct, he's gonna need these bonds to continue to sell off, which I actually think that they will. I think this week we may get a little, it'll come up in here and mess around. But because this is a heavy support area, we may get some consolidation here. But if the bonds break out and take out this low from back in October, that's gonna take the whole market down, in my opinion. If the bonds don't hold here, as the bonds go, so goes the market. That's just a old, that's something that, I hear a lot of old traders from back in the day say from some of the podcasts that I listen to. Everyone watches and pay attention, they pay attention to the bonds. And one way to, as a retail trader to watch TLT. If the TLT takes this low out, now I'm gonna show you something else. I'm gonna show you something else. Now you look, remember, keep your eye, look at this chart. Now look at this one. This is the 30 year. So this is when you hear them talking about interest rates going higher, this is the 30-year treasure. This is the 30-year yield. Excuse me. This is Now if this right here, if you look at this gap right here, this is when Bill Ackman's trade was announced. Go back and look at my previous videos, the one where I talked about the Bill Ackman trade. You'll remember the chart was here. And I was talking about the power of talking your book, right? So you announce a trade and then come out and then tell the world, hey, you're into this particular trade. Now, what he was doing was shorting the ZB or the 30-year bond. I don't know if he actually did it in the futures, but he did it. However he did it, this is it. This is the 30-year bond. And you see how it's down? Now, the reason why I'm showing you this 30-year yield right here, this is a cleaner chart to look at. Look at the highs. It's up there at the high. The high was what? 4.408. What did we get to last week? We already took the high out. We already made the high for the year. Now, if or the yearly high, shall I say, what I think will happen, let me put my indicators up here. Let's look at the MACD, which is my favorite indicator, by the way. But we will get more into it. I'll talk more about that. Now, if I'm looking at the MACD, you see how these lines are continuing to go up. Now we are starting to get a little bit of it is starting to slow down as far as acceleration goes, but the momentum is still going up. So we could get a little pullback in and around here. But I suspect if I gotta make a bet, and I like betting, that we probably will get a little pullback into here, maybe even to here. But at some point, I think that this will go parabolic and continue to go up. With that being said, if that happens, then I expect the bond to come down, which the yields, react inversely to the bonds. Then we'll get the bonds coming down and we'll continue to get our down move in the overall market. Now, let's go and take a look at the next thing I wanted to talk about was Microsoft. I've been talking about Microsoft for a couple weeks. I've made a little bit of money buying puts in Microsoft, um, just trading in and out because it hasn't like taken off to the downside. It's kind of like drifting. You can see it kind of drifting sideways. If I went to a lower time frame, I guarantee you on the hourly, this is like a channel and it's just channeling down. I do think we may get one more down day and it'll get down here at around 309, 310. And then once we get that move right there, we'll probably get a big pop to the upside, possibly. Um, but that doesn't mean that it will. It's not moving down with any force. It's just kind of like dragging down. This is something almost more where you almost would rather be selling calls than buying puts. Buying a put, you like to have a faster move. Selling a call, you really don't care. You can just get paid off a theta decay. Um, Now at the top of this move, all right, let's go ahead and talk about why I think or why my favorite indicator is the MACD. And I'm gonna use this on Microsoft. I'm gonna use it on Tesla. I'm gonna use it on Meta, and I'm gonna use it on. Stay to the end of the video. You'll get a trade, and you'll get another stock that I'm using it on. So as you can see up here at the top, you can see we made a high, right? And then we had high, high. So we got high, low, high, right? All the while, the MACD was making lower highs. So that's signaling a slow in the momentum change. And we got our turn and then the market went down. If I go back and show you the SPX, you're gonna see the same thing. I got a trend line drawn up here. You see it from high to high to high, and then you can see high, high, high. As it continued to get lower on the MACD, which means that momentum is slowing down. That means the market is slowing down. It's getting ready to turn. It's like imagine like you turning a you ever seen like some of them old black exploitation videos or back in the 70s, the players and the pimps had the long Cadillacs, right? And so you can't just whip a Cadillac. You just can't. You got a big car, like you just can't whip it. You just can't and then just turn the car. You got to slow down and then you got to gradually turn the car, right? You got to slow down first. This is the same thing with the market. The market acts, I know it sounds crazy, right? But I can go through and show you turns in the market and you're going to see the same thing. The momentum slowed down before the market turned. So the same thing here. You got momentum slowing down. You got the highs here. Still make price action still going up, and then you got the turn, and then we got our down move, right? So we got that in Microsoft. Me personally, I'm done shorting Microsoft. That does not mean that I don't think that it can go lower. I definitely have price targets that are lower than this 308 level. I'm just not willing to trade them that low. It could go all the way down to 240, right? I'm just not willing to bet that. I don't think that it's not going to go down with the velocity that I would like for it to, so I just won't trade it. You can be right directionally and still not make money in the option market. You can be right, and the same thing with like shorting stocks and owning stocks. Can you afford to hold things? A lot of it is just like mentally, right? So if it's not moving fast, then I don't want to be sitting in it. So whatever money I've made here, I'm done with it until I see something more definitive. Tesla, same thing. Look at this, my favorite indicator. Look at the MACD. See the MACD? Got a high, lower high, lower high. Look at this high, high, low, high, high. So as Tesla was making highs, the MACD was making lower highs. It was signaling that momentum was shifting, it was changing, it was slowing up. So at that point, you got to be watching. So if I'm long, so how do you use that? Like if I own shares of Tesla, hey, I'm looking for places to take profit. Maybe I take profit here, right? So if you got in somewhere down here, you know, yeah, you're going to miss this part, but you also missing this. So you can find somewhere to take profit, maybe after the second, like me like here. So you got a high and then you got a lower high. So once I start seeing that down here, these averages down here going down, hey man, let me take some money off. Let me take half my position off. Let me start looking if I want to short or if I want to hold my position. Let me start looking at selling calls against the shares that I own. Let's take a look at let's go to Meta. Same thing. I think I already got it drawn up on Meta. Hey, if you're watching the video, don't forget to hit the like button. I'm dropping jewels in here. Stuff that you can take action on, and it doesn't matter what market. You can be trading this on Forex, you can be trading futures, stocks, it doesn't matter what you trade, crypto. This is where you want to be. I mean, this is the indicator. If you don't use any, this was one that I like. If somebody asked me, like, give me one to use, I would give them this. And then after the MACD, I would talk about RSI, and then I would use a stochastic. So like I would say like those three, and then maybe I'll do a video on on the RSI, and then maybe the stochastic because I do have my stochastic on here, but I have a certain setting that I have it on, right? The original one that like George Lane used when he started using stochastics. But I'll say that for another video. So look at Meta. You got a high, low, high. Look at this trend line going from these peaks right here. So we got high, low, high. Now look down at the MACD, getting lower highs, signaling a change in momentum. And then we got it to roll over. Now what's crazy about Meta? I've been talking about Meta. Look at this. Look at this, like this channel. And then we finally got it to break right here. I wasn't even gonna look at Apple, but I think I got Apple drawn up too. Look at Apple. Apple look crazy. Look, I'm gonna take the indicators off so you can just see the channel. Look at the channel that I got drawn, right? So I'm gonna put the indicators back on. Now let's bring up the MACD and see what we got cracking down here at the bottom. Gonna see the same thing. Look at that. See how it made high? It was continuing to make highs, but before it turned and dropped, look at the MACD. You see the MACD start dropping? Momentum had already slowed down. That's a clear signal for you to bail on whatever you're in. Take your profits. You made a little money. Now let's look for a better place to re-enter. Or, or if you are, if you know how to trade options, that's the time to start selling those calls, right? You could have been selling them all the way up, but that's a sure sign to start selling calls and trying to basically lower your deltas. If you own 100 shares and then you go sell a 30 delta call against it, now you're basically a positive 70 deltas on that particular position. Um, so that's a little bit more nuanced trading, but anyone can use the MACD to see where to get out or where to get in. Just so happens that we're at the top of a market. Same thing. Let's go take a look at now. I'm going to show you. I actually got entered a trade on Friday before the close in Lockheed Martin. Now, fundamentally, you may say, "Well, why Lockheed Martin?" That ain't something that I generally um, would trade. I don't think I've ever placed a trade in Lockheed Martin. I don't know, but I got one in there now. I ran a scan. I need to do a video on scanning. But I ran a scan and it popped up in my scan, right? And so once something pops up in my scan, now the thing that I got to look at is the criteria. Like I got to look at momentum and things of that nature, right? So let's look at the MACD. What do we got? Now this is a little bit more of this divergence you got to really look for. You see, right? We can see it though. We can see we got a low and then we got a low. So this low was lower than this low, right? So I would come up here, give me a trend line. Let's draw a trend line. Let's go from here. Let's go from here to there. You see that? That ain't hard to see. As I say, it ain't hard to tell. Um, you go right here. If you ain't never heard that song, y'all need to go. Nas was spitting on that. Go Google. It ain't hard to tell. From I think that was on the Illmatic CD. So right here at the bottom, right here. So we got another. So let's look at that. Now you see that divergence. You see how on the MACD start making higher lows. So we got a low, high, low, but this low is higher than this low. But price action, this low, price action kept going down. So it's kind of signaling a change, crossover of the MACD. So look, I hit that trade. I hit it on Friday. So I seen it and then I came and I hit it. I bought a call option, right? This ain't something that if this market turns and takes this low out, I'm out of this trade. I'll take my L and move on. For me to get out, I don't have a stop. It's an option, but if it goes below, if it takes out this low, if it turns around and goes down below 442, I close the trade. And I'm looking to take profit somewhere up here, sell out of my trade around 460, right? So I actually went down to a smaller time frame to show some levels on the trade that I have, but I don't want to make this video too long, so I just wanted to, talk about that. So couple of other things you can do with to go along with the MACD, like is volume. Look at array on breakouts and stuff like that. You want to see volume increase. We look down here, we can see the volume increase down here um, on Friday, where it took out the volume for these previous 2 days and this basically this day as well. So we'll just see how this trade and Lockheed. Now, obviously, Lockheed does have some news to back up this move. That don't mean that it's going to continue to go up, but as far as I know, military aid is continuing to go to the Ukraine. If we just look up the news, this is news for Lockheed Martin. U.S. approves sending F-16s to Ukraine from Denmark and Netherlands. Um, U.S. approves, let's see, U.S. State Department okays potential sale to Australia of HIMARS for 975 million from the Pentagon. All of these to produce titanium plate for testing by Lockheed Martin. A lot of this is war material. And as far as this is, as far as long as the wars are gonna continue, as long as we're gonna have wars, and rumors of wars. You know, Lockheed should make money. Raytheon, these particular stocks that they got something to do with fighting wars and stuff like that. So now I didn't look at any of this when I got ready to make the trade, but when I seen it, it made sense because I understand what's going on geopolitically. But most important, some come up on the scan. I gotta see something that's fitting my spidey senses got to tingle, and what gets my spidey senses tingling is that MACD crossover, which I got a MACD crossover, and then I got some divergence. I even got some divergence on my stochastic. My stochastic, jumped out of the oversold level and it popped too. So let's see what we get this should be a trade that I should be able to get in and out of within a week. I went out 60 some odd days. I'm away out here in 62 days in October. And so I wanted to be out far on the trade, give the trade enough time to work or not work and not be, really subject to theta decay or a whole lot of it anyway. And say with that, guys, like I said, hit the like button, hit the subscribe button, hit that little bell notification so you get notified whenever our video goes up or if I go live, and comment, what indicator you like to, whatever indicator you like to use, put it in the comments. Um, so I did this one on the MACD. I'm going to talk about the RSI. That's my second favorite indicator to use, and I'll show you how I use it and what's the best way that I think to use it coming up in a future video. And with that, guys, I'm out. Peace.